Hello and welcome to Crypto Weeklies. In this video, we analyze ETH. None of the content is financial advice. The price of ETH, the Ethereum token, is at around $2,100. The price has declined quite a bit over the last week since that rise from that support from the level of support that it hit slightly under $2,000 level. At one point, the price did rally. This is the red line, which is the 300-week simple moving average, and the white line is the 200-week simple moving average. It tried to rally to the midpoint of these two levels between $2,300 and $2,400 level. Got rejected over there and then came back down in the short term. The price is now at around $2,100. These are the momentum based candles at a monthly level. Looking at inferences from the last bear market, and this ascending slope of support since June 2022. Again, one could be slightly more bearish and then try to hit the wicks over there from the initial zone and try to draw it like this as well. From the 2022 June drop, getting that wick to the April 2025 drop. Now the initial drop in that month of February did take the price to $1,700, which was slightly lower than the midpoint of the zone on the yellow zone, the dotted yellow line. This month the price again visited this midpoint at around $2,000 level. What could happen in the next couple of months is that slowly but surely price goes and does something similar to the 2022 first major drop to the lower end of the yellow line, which currently is at around $1,570. But let's say if the low gets formed in July 2026, the drop in that month to the lower part of the yellow line would be somewhere close to $1,600 to $1,700 level, and then finally settle up over there and then take it from there. That is one possibility if the zone of support were to hold true for ETH. If not, the other area of support for ETH, which ETH has held since September 2023 and then again following in April 2025, is slightly below that at around $1,557 level. So this is the worst case scenario for ETH if there is a further drop. The rally in the short term, if let's say there is some more wiggle room for the rally to go, the 20-week simple moving average, which is this red line over here, if we try to extrapolate what the behavior of this 20-week simple moving average could be, that area of resistance for ETH, if there is one more rally to the upside, is somewhere between $2,400 level, and if let's say ETH gets to that level close slightly sooner, then that level of 20-week simple moving average could go as high as about $2,500. So between $2,400 and $2,500 could be the potential upside. The potential downside is between $1,550 to $1,700 for ETH. Looking at our own website, CryptoWeeklies.com, this is the homepage of the website. This is my own website. All of the content available for free, no signups or anything required. This is the homepage. It says that the composite risk model, which takes into consideration all of our individual risk-based models, such as time-weighted average price model, the regression based model, the 20-week simple moving average model, the drawdown based analysis, volatility and beta and Sharpe ratio based composite score for ETH is still has now gone in that accumulation phase where the risk is at around 0.28, which is less than 0.3. This is because again now the price has cooled off quite a bit. Again, you can see that through the lens of the time-weighted average price model to identify how far this price is extended from this white line, which is the time-weighted average price line. This time-weighted average price line helps identify where the asset has spent its entire life. Again, this is tracked since November 2017. I know ETH was launched in 2015, but again, it was largely an unknown entity since till that 2017 major rally, and this data is sourced from Yahoo Finance. And at a daily level, the daily average price of ETH is analyzed and color coded with respect to the distance between the price and the time weighted average price. The time weighted average price for ETH right now is at around $1,700. In the last bear market, the time weighted average price provided the area of support. Again, this is a dynamic model. It does not change its shape or form based on new data. It just prints new data and forms the new time weighted average price. So the time weighted average price for 2022 as calculated in March 2026 would be the same in 2027, 2028 and moving. So it does not retroactively fix any past data. Similarly, the 2025 drop in that April found a support in time weighted average price at that. So one could say almost 4 times price has gone and found support at the time weighted average price. Again, this kind of trend does not last forever, and eventually towards the end of the bear market, what I would expect is that price of ETH to capitulate to the downside and again go significantly below the time weighted average price. I'm not claiming that it has to do that, but again, if history is any indication, if a support level is tapped for many times across multiple years, it eventually gives way and price has to correct to the downside. So if that kind of happens, and let's say at that point the time weighted average price for ETH at that point in future is close to $2,000, a 20% drop on that from that time weighted average price would take the price of ETH at around $1,600. A 30% drop would take close to $1,500 level. In the worst case scenario, let's say if there is a 40% drop from that $2,000 level of time weighted average price, then the worst case scenario for ETH is close to $1,200. So that could present itself in the later half of 2026 if there is a panic towards the end of the year. Nonetheless, again, no one has the crystal ball to kind of with a certainty that claim that has to happen. Nonetheless, price of ETH, whenever it goes close to that risk level 1 or 2 over here, if the time horizon is long enough, accumulating ETH at risk level 1 or risk level 2 is not the worst idea. Again, not financial advice, it's just how the asset class has matured and looking through the history of time, identifying what zones are great buy zones. One could argue even risk level 3 is, again, in the interest of a longer accumulation phase. Risk level 3 could also come into play. Right now, the risk is risk level 4. It's not the worst time to DCA. At the current drop as of today, from yesterday's rally, did take the price back into the risk level 3. Now there is only difference between the price and the time weighted average price. The difference is only 25% to the upside. In the last bear market, there was a difference of negative 9.5% to the downside. So there were a couple of days where the price did decline by about 10%, roughly speaking, below the time weighted average price in the last bear market. Right now it's at risk level 3 again as of today. Let's see if the price finds support over here or at the time weighted average price at around $1,700 for ETH. The major models again that I would like to discuss today, I don't want to go in detail with all of the individual models, just the ones that have the maximum weightage for the overall risk. The first that we discussed was the time weighted average price model. Arguably the second one has slightly more weightage, is the logarithmic regression based interpretation of what the fair value of ETH is. This is the polynomial regression at log scale. Identifies what's the fair value for ETH. Right now it's at around $3,800. The price is lower than not just the fair value but also the one standard deviation residual drawn to the downside. So close enough to that level, and if we account for diminishing volatility and identify the same model that we just saw, the fair value at around $3,800, and instead of just having the one standard deviation residual drawn as a straight line, this accounts for a decay. So you can see the thickness or of the separation goes down with time. That's because and that's why the price, one standard deviation residual price, is at around $2,400, whereas the other model over here, you would find the same price at around $1,800 or $1,900. That's because this particular model does not account for diminished volatility, whereas the decay model does account for that. And the decay model suggests that the price of ETH, if we look through the lens of history, has gone to a zone of bottom, at least one standard deviation bottom lower than that. That doesn't mean that the 2 standard deviation bottom or the 3 standard deviation bottom would not come into the play in the later half of 2026. If the worst case were to pan out, the second level of support for ETH is at around $1,500, as mentioned previously. And if there is a macro recession, in not just in crypto asset class, in the macro environment, the worst case scenario for ETH, the 3 standard deviation or 3 standard deviation residual support is for ETH is at around $950. That would be price at that level would be slightly higher than the 2022 lows for ETH. All in all, if we were to expect or try to estimate a bear market bottom through the data that we have thus far, the worst case scenario for ETH is at around $1,500. Again, claiming for recession is easy, but again, there is no evidence right now that recession is on the cards. So with the data that we have thus far, the base bear case for ETH as a aggregation across these individual risk-based models is at around $1,800, which is roughly speaking 15% lower than the current price. The worst case scenario is at around $1,500, which is at around 31% lower than the current price. And to the upside, if let's say using the same models, one using the chart, and then we'll look at the this is using the table, and then we'll look at from the chart's perspective as well. The base peak forecasted for ETH in the next bull run is at around 8,000. The midpoint is at around 10k. So 10k could come into the picture, and let's say if ETH were to bottom somewhere at around 1200 to 1500, from 1500 the rally to 10k would be roughly speaking 8x from that. My apologies, between 6 and 6.5x from $1,500. If price were to go any lower in 2026, let's say at around $1,200, then a bull peak in 2028, 2029 to 10k would be roughly speaking 8x. All in all, if we were to look at what could happen for ETH using the diminished decay model to the upside as well, what we can look for is, let's say if there is a decent alt season in 2028 time period, the orange line right now is at around $9,600 to $9,700. If we assume that this line stays constant with no further growth to it, and instead of price going to the orange line, it struggles, and at that point the orange line is at around $13,000, then still if from this estimation, it's still likely that if there is a decent alt season, and if this orange line comes into play like it did in 2017, 2018, and also in 2021, did not come into play in 2025. In 2025, the peaks were achieved at 1 standard deviation non-euphoria ceiling itself. That conservative target for ETH next time around is at around 6k, and then the 2 standard deviation target is at around $9,700. With that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.